continues when this CNBC special report, Markets in Turmoil, continues.
It's a massive Monday market meltdown as the trade war with China intensifies.
The Dow down 873 points.
China's actually starting to weaponize its currency.
Technology stocks down, bank stocks down.
Apple shares are down 4%.
China's currency weakening against the dollar, making products made in the USA more expensive.
This trade war with China escalates.
China retaliating against the U.S.
The trade war, of course, is looking more like a currency war.
Tonight, we'll break down this sudden sell-off ripping through Wall Street and debate what's next for the stock market.
It's been ugly all day.
This is a CNBC special report, Markets in Turmoil.
We're witnessing a dramatic shift in consumer psychology. It was part of the American dream to own stuff. Increasingly, if you can acquire or use something on demand, that's better than ownership. We're also going to see supply chains ripped apart by the cloud and by data. The on-demand economy is real-time and responds to what consumers want.
Without talking to your doctor. Common side effects.
We're turning extra space
into extra
Dash Pad tomorrow 10 Eastern.
Welcome back. Let's take a look at the futures right now. Again, middle of your screen there, all the way over to me, what's the right. The Dow is now less than 500 points lower for the open as we look at it, down about 473. But still, we've fallen precipitously on top of today's 767 point trade at the bell today. Futures are thinly traded at this hour, can be very volatile, and that's why we get some big swings. But with Asian markets getting ready to open in the next hour, let's head to CNBC's Matt Taylor in Singapore for a look at how things are setting up there. Matt?
Hi there, Kelly. It looks as though it's going to be a precipitous decline here in Asia as well. We already have one market that's up and running down in New Zealand, been up and running for about an hour now, and we do have that market with a decline of about 2% or so. Remember, we're coming off 3 days now of strong declines across Asia. Friday, we reacted, of course, to the tariff news. Yesterday, markets were down by around about 2%, and it looks as though we are shaping up for a similar story today. Lots of markets are being spooked with respect to currencies. We've seen some really volatile moves, particularly in some of those currencies that benefit from the risk on trade. Things like the New Zealand dollar and the Australian dollar are moving sharply weaker yesterday, as we, of course, saw the yuan move above that 7 level. So expect to see more volatility there today as well, given the extension in the weakness that we've seen in the Chinese yuan. The Japanese yen as well, of course, benefiting from, of course, markets being volatile. We see a lot of money going in for that safety trade. That really strengthening to 105. That's really going to pressure Tokyo stocks, coming online in about 30 minutes or so from now, and expect about a 700-point decline for the Japanese market. Kelly.
Wow. All right. That's a big one. Matt, thank you very much. Matt Taylor. On a day like today with so much selling and so much volatility, is it an opportunity to buy or a day to get out? Here's Melissa Lee and the Fast Money Traders.
I'm Melissa Lee. Our traders on the desk tonight are Tim Seymour, Brian Kelly, Karen Finerman, and Guy Adami. Wall Street handing in its worst day of the year. So does this present an opportunity to get in, or do you steer clear? Guy?
I still think there's some pain ahead, Mel. You know, we talked about it on our show earlier tonight. You got to look at levels in the S&P 500. I think 2,720 is a level that if the S&P gets to, you look at stocks that sort of correlate. What would those stocks be? Names like Apple, names that you've been dying to get into for a while. That makes sense. But if you're asking me, is today the day? No, I still think there's another 3.5–4% to the downside.
Selectively, though, Tim, are you looking?
Well, selectively, you make your list here. And again, the other thing you do is you look at your portfolio, and the names you have the most confidence in are the ones you probably leave alone. People tend to make a lot of mistakes right now, but well-researched names are names that actually you feel good about in this environment. But right now, you're making a list. I think 6.5% in 2.5 days on the S&P is not something you need to run into tomorrow.
Right. You're looking at names like a Google, for instance. Right. But I mean, I think a lot of people's reaction would be, the house is burning, you buy insurance, unfortunately.
Right.
And what do you do?
Here's the thing. So what happened to the price of insurance? It's skyrocketed over the last 10 days. So for me, the more pressing issue is, okay, now I'm long insurance. What do I do with it? I have to sell some of it, because let's say the market goes down a little bit, or the market comes back, or the market skyrockets. In all three of those scenarios, that insurance that I own is going to get crushed. So before I can go out and buy stuff, I got to get rid of that super pumped up insurance.
For all the people who are looking for opportunities to buy in today's market, we did get news tonight that the U.S. Treasury Department has designated China a currency manipulator. How does that change how you tactically buy and whether or not you buy?
Well, I think you probably have to wait a little bit for the market to kind of digest this all, right? So you have, right now, currency markets are going crazy. There's a lot of volatility there. That currency volatility would likely translate into stocks. So, you know, to what everybody's talking about is you don't have to panic into something, and you don't have to panic out of anything at this point in time. I think the key right now is everybody's worried about, you know, don't just stand there, do something. The motto in my office, days like this, don't just do something, or don't just...
Yeah, you...
Well, what did I say? Don't just
do something.
Stand there. That's what I was trying to say.
What I would point out, though, is there certainly are higher beta parts of this market. And if you look at semiconductors, despite pulling back almost 13% in 8 sessions, remember, this started actually a week and a half ago for semis, but you're still up 30% on the year. And I realize, you know, you can pick the numbers, and we had a terrible December. But the point is that I still think that if you're looking for headwinds and you listen to the CEOs coming out of earnings season, we don't think that the cyclicality of semis is going to pick up overnight.
Okay.
Definitely not.
Tomorrow morning, you wake up, 7 o'clock, you have your coffee or orange juice, whatever you do. What are you looking at?
Orange juice. First thing I look at, I'm looking at the gold market, I'm looking at bond yields, and I'm looking at the move in the U.S. dollar versus the yen, which I think BK can speak to.
The Japanese yen.
Exactly.
As a safe haven trade. Okay. Kelly, back over to you.
Melissa, thanks. Then don't just do something, stand there, because there's a whole lot more ahead tonight on this CNBC special report, Markets in Turmoil.
As China puts more pressure on the U.S., President Trump puts more pressure on the Federal Reserve. That's next. Plus, the White House's next move as the fight with China gets a little hotter. This CNBC special report, Markets in Turmoil, returns in 2 minutes. Trade turmoil continues to batter Wall Street, testing the strength of companies and investors. An early market read on first trading action. Tomorrow, Squawk on the Street.
Everyone uses their phone differently and in different places. That's
disease is out.
Stocks fall as the trade war goes to the next level.
Where the United States is accusing China of manipulating its currency.
We're continuing to see stocks tumbling here.
China retaliating against the U.S.
This trade war with China escalates.
We have a escalating trade war.
It was an ugly day.
Some say could now become a full-blown currency war.
Is it time to get out or to buy in? The debate is on. This is a CNBC special report, Markets in Turmoil. Once again, here's Kelly Evans.
And if you're just joining us tonight, stocks are coming off their worst day of the year. All the major averages closing down around 3%. For the Dow, that was a drop of 767 points, and we were down nearly 1,000 at the lows. The S&P dropped 87 at the bell. The Nasdaq, the worst performer, falling 278 points, or 3.5% today. Even the Russell 2000 dropping 3%. And the president taking to Twitter to criticize the Fed on China's currency devaluation and the ensuing market reaction. The president asking, are you listening, Federal Reserve? Well, senior economics reporter Steve Leisman is listening.
Kelly, thanks. While the U.S. battles China over trade and now currencies, there's another fight going on here at home between the president and his hand-picked chairman of the Federal Reserve. President Trump ratcheted up his pressure on the U.S. Federal Reserve today after the Chinese currency fell to its lowest level in more than a decade against the U.S. dollar. The president tweeted out, quote, China dropped the price of their currency to an almost historic low. It's called currency manipulation. Are you listening, Federal Reserve? this is a major violation which will greatly weaken China over time. The president has been on a long-term campaign to get the Federal Reserve to lower interest rates, which he believes would reduce the value of the dollar and help the U.S. economy. All of this sets up the potential for a deeper battle between the president and Fed Chairman Jerome Powell, whom the president appointed. Powell and almost every other Fed member has said explicitly they do not make monetary policy to affect the exchange rate.
The U.S. Treasury has responsibility for exchange rate policy, not the Fed. And we don't comment in that sense on the level of the dollar. We have the responsibility for maximum employment and stable prices, and we use our tools to achieve that. Of course, we do that through changing financial conditions, and one of those is the dollar, but we don't target the dollar.
In fact, the Treasury Department has a so-called exchange stabilization fund that can be used with the president's approval to intervene to weaken or strengthen the dollar. But it's rarely used, in part because currency intervention is not seen as especially effective. There just isn't enough money to go up against the $5 trillion currency market. That's not to mention, in several international agreements, the U.S. has pledged not to intervene in its currency. But if the president does intervene, the Fed has a choice to join it and support the intervention with its own money or not, and that creates another potential flashpoint here. It would present Powell with a tough dilemma. It would be unprecedented in recent memory for the U.S. to intervene on its own, that is, without the support of at least one and usually several major nations. Kelly?
All right, Steve, thank you very much. We'll talk more about this in just a moment. If the president does intervene, the Fed can choose to support and join that or not. Here's Futures trying to make sense of it all.
Almost entirely quiet today from the White House, other than that tweet from the president that you heard Steve read just there, in effect calling for help from the Federal Reserve in terms of lower interest rates going forward. That seems to be the implied message from the president. Other than that, though, no on-camera press briefing today, no background briefings from high-ranking administration officials not flocking to the television cameras as you might expect that they would to offer a counter-narrative today. Instead, this administration very much hunkering down. Privately, people here are telling me things like, look, markets go up, markets go down. We think it'll bounce back tomorrow. And also expressing some optimism here that the president's strategy long term is going to work and bring some results in terms of reshaping that relationship with China. But they're very aware that today was a painful day in the markets.
So, Eamon, in summary, no panic at the White House over a stock market that the president has repeatedly referred to as a major benchmark of the job he's doing.
Sure, and that's the irony here, right? I mean, the White House officials have said early on in the administration they viewed the stock market, the Dow in particular, as a real-time barometer for how they're doing, what their performance is. Today, though, they just didn't want to talk about it on camera. I can tell you, I spoke to a lot of officials privately today. Nobody who would go on the record, though, to talk about any of this, and leaving it all up to the president to lead with his tweets. And so that's what we got from this White House, is the president's tweets. They do give you a sense, though, of what the president's thinking and the direction he wants to go. So to that extent, they are communicating, and they're doing it right there on Twitter for everyone to see.
And Eamon, stick around. Steve Leisman is still here, and we have some fresh headlines from the Wall Street Journal. All four living previous Fed chair people, Steve, coming out with an op-ed calling for the need to preserve the Fed's independence right now. This as the president
The president writes a critical tweet of the chairman and the Federal Reserve. All of those tweets, every single one of them, is one more than Bush, Obama, and Clinton ever did.
Right, and not just Twitter, which they didn't have back then, obviously. Any comment at all. But here's an interesting point, and Eamon, I'm curious for your reaction on this as well. But this Fed has shown no resistance to doing its part to support the economy, ironically, because this is all pointing in the same direction. So the tariffs seem to be hurting the economy. Right. The Fed is willing to step up to help and to support it, Eamon. It's not as if they're resisting this president. They've actually pretty much followed and tried tried to clean up the mess.
I mean, you heard Jay Powell say that, right? I mean, he came out and said that all these uncertainties around trade policy are part of the thing that's impacting the financial market forecast that he's making, and therefore, or the economic forecast that he's making, and therefore, that's part of the reason why he needs to move forward with the rate cut. So, to that extent, they are getting pulled into this fight, even if they don't want to be in there. And I can tell you that op-ed by the directors will be read here at the White House and largely ignored, right? Because this is a White House that views it as entirely within the president's prerogative as a citizen of the United States to express himself on any topic, and particularly on the Fed. They say they're not bullying the Fed. It's just the president speaking his mind, and I just don't see that changing even after this kind of a broadside rhetorically.
Yep, probably unlikely. Guys, thank you both, Eamon Javers, Steve Leisman. And here's what's next on this CNBC special report, Markets in Turmoil.
Calling Cramer. Mad Money man Jim Cramer is taking your calls on stocks next. We'll also see how the Chinese media is reporting on this crisis as we get you ready for Tuesday's U.S. trading. This is a CNBC special report, Markets in Turmoil.
After years of overpaying for eye and I am a nurse. I realized I'm getting more coverage for less. Working with Policy Genius, I saved about 20%. Not only did I save 20%, but I got extra coverage. It just feels like I could take a deep breath and sleep well at night.
The semiconductor stocks, often seen as a market bellwether, among the hardest hit sectors by today's market sell-off. Aditi Roy following that for us live in San Francisco. Aditi?
Hi, Kelly. Semis have had a tough time with tariffs, and today was no exception. The big names were all in red. Some of the top losers: NVIDIA, AMD, Universal Display, Lam Research, AMD, and Micron. And the SMH had its worst day since the beginning of the year, down more than 4%. Goldman Sachs recently put out a note listing the Russell 1000 companies with the greatest exposure to China, and Qualcomm, Micron, and NVIDIA are among the top 6 companies on that list. Meantime, some CEOs of chip manufacturers are also speaking about the trade impact. Micron CEO Sanjay Mehrotra said during the company's most recent earnings call, with economic and trade challenges facing the industry, the near term continues to be uncertain. Meantime, the Semiconductor Industry Association says sales during the first half of the year were 14.5% lower than the same point in 2018. Kelly, back to you.
Aditi, thank you. Aditi Roy, let's get a check on the futures once again. You're seeing the Dow pressured off more than 500 points for the open at this hour. Here's the Nikkei futures as well for Japan, which is about to open in 15 minutes time. Similar magnitude decline, down nearly 600 points or 3%. So where should investors be looking now, and how can you protect your portfolio? Let's get back to Jim Cramer taking calls in the Mad Money studio. Jim?
Thank you, Kelly. Let's get straight to the phones and get to work helping people out. Let's start with Riley in Georgia. Riley.
Yes, sir. Booyah, Mr. Kramer.
How are you, Riley?
Great. How are you, sir? I know a rule of thumb you've always said is 10% of your portfolio should be in gold. With days like today, would you up that any?
Yeah, look, it's just an important insurance policy. I like individual gold stocks. The two that I like are Barrick Gold, and I like very much Sean Boyd's Nico Eagle, AEM. If you don't want to own the stocks, though, the GLD is fine. Gold is very valuable at this time, as we see. Let's go to Bernie in Georgia. Bernie.
Hello, Jim. I bought Walmart on July 19th. How will it fare after the president's tariff announcement?
Well, it's going to go down again tomorrow because if you name a country a currency manipulator, they're obviously going to retaliate. But I do believe that that Walmart had an unbelievably good quarter, and so therefore the idea of panicking and selling Walmart here is probably a mistake. How about Clyde in California, please, Clyde?
Hello.
Hey, Clyde.
Dr. Kramer. What is wrong with Boeing? They haven't fired anybody, and they come out with different news every week. How can we do any homework on a company with so many uncertainties?
You certainly
Would you buy it or not?
No, you can't, Clyde, and you actually hit upon the point. They can't get ahead of the narrative. I feel like every day they're behind, and because of that, I think it's somewhat uninvestable right now, even though it is a great American manufacturer. Back to you, Kelly.
Jim, thank you very much. Jim Cramer, and take a look at China's currency, which has been in the middle of all this. The yuan right now at new lows, almost 7.14 to the dollar, and it only broke through 7 earlier today. We'll show you where we stand as we get ready for the day next. Don't go anywhere.
You wouldn't accept an incomplete job from anyone else. Why?
Lower by nearly 600 points right now, and a moment ago, it was a new low at minus 640. Remember, futures are very thinly traded at this hour. They whip around a lot, but it gives you a feel for the sentiment out there right now. Let's get more on how China is responding to all of this. As news breaks, the U.S. Treasury Department will designate them as a currency manipulator. Eunice Yoon in Beijing. Eunice?
Thanks so much, Kelly. Well, all eyes this morning are going to be on the Chinese central bank and exactly where it sets the value of the currency. As we all know, the Chinese government very heavily controls the value of the currency, and every day it sets a trading band for the renminbi. So we're going to see just how tolerant the policymakers are here to having the currency weaken past the psychologically important 7 mark. And what's interesting is some of the headlines this morning in the major papers are all indicating that the central bank is going to want to keep things stable. For example, the China Daily, one of the state papers, the headline reads, yuan's exchange rate will remain reasonable. Xinhua, the state news agency, says crack 7, which is the way that Chinese currency traders have described what happened, is a normal fluctuation. Impact is limited. Kelly?
Wow. Eunice, thank you. We'll be keeping a very close eye on the news flow there. Eunice Yoon in Beijing for us. Up next, a look at what is likely to move tomorrow when U.S. markets open. We're back in 2 minutes. Stay with us.
At T-Mobile.
Yes, I mean, just yesterday, China did something that for the first time in 11 years allowed the yen to get below the 7 mark, and I think that Secretary Mnuchin's statement speaks for itself. And really, to put this in context, it just seems that China is using its currency to have an unfair, non-competitive advantage. And so, by the same token, the president continues to have his trade team working closely with the Chinese. Secretary Mnuchin, Ambassador Lighthizer were just there. They'll continue to speak with them, hoping to get a good bilateral trade deal that benefits Americans and American workers and doesn't have this $500 billion trade deficit with the second largest economy in the world, which previous administration thought was somehow a wise and prudent strategy.
Is he worried that this has...
That was Kellyanne Conway making some comments just moments ago about the stock market, the first White House official to weigh in on the action today. Eamon Javers is at the White House with more. And Eamon, she said the way they see it, it's a tit for tat with China here.
Yeah, absolutely, Kelly. I told you there wasn't much reaction. I was able to just get her and ask her that question. I also asked her about the stock market decline she saw today. She said that was a result of what China did, not what the United States did. So the White House very much paying attention here, Kelly.
Great stuff. Eamon, thank you. Eamon Javers at the White House. Let's fast forward the clock to tomorrow morning. What should investors be expecting here in the U.S. the day after the worst performance of the year? Bob Bassani is back with me. Shannon Sakosha here as well. Shannon, Guy Adami earlier said he'll watch gold, the 10-year, the yen, the Japanese yen. What to you is going to be the tell?
I think the 10-year is very important. I also think the dollar is critically important. And although it's only one company, Apple, who's really at the epicenter of this conflict in so many different ways, I think that's going to really be a bellwether for sentiment tomorrow.
Is Apple itself a bellwether, or are they uniquely affected by the U.S.-China relationship?
I think they're uniquely affected, but I also think they're representative of the way so many companies have globalized their supply chain and also branched out into new markets. And so that's why they become such a focus for us when we talk about the China conflict.
Bob, what about you? And we know we're going to hear all evening and into tomorrow morning about the ramifications of this designation. Now, the U.S. saying that China is manipulating its currency.
I want to know what the practical implications, a lot of email back and forth about what it really means. I think we're going to hear more about that. I want to hear what the currency fixing is going to be tomorrow for China. I want to see if the president tweets anything overnight. The one thing you're not going to see is people picking up bargains. And Apple's a good point. Apple's down 9% in the last 3 days. Caterpillar's down 8%. A lot of what looks like bargains. No, they're not. Not with this kind of level of uncertainty. They're taking down the multiples for the overall market right now. And if this keeps up for another few months, they're going to start taking down earnings estimates. So it's a very difficult time and not a good time to necessarily be picking up bargains.
Shannon, would you be picking up any of them?
I think you can be thoughtful right now, but I don't think it's those stocks that are at the epicenter. Someone mentioned Boeing earlier. Sure. That's a great example of, poor execution, but also, very tied to China. So I wouldn't be jumping in here for those types of names.
All right. Thank you both. Shannon Sakosha, okay. Bob Bassani, futures down nearly 600 points at this hour. You've been watching a CNBC special report, Markets in Turmoil. We're back with Worldwide Exchange at 5 a.m., Squawk Box at 6 a.m., of course. And in the meantime, go to CNBC.com all night for the very latest on the market reaction globally to this escalating trade war. American Greed starts on the other side as soon as we're done here. Good night.
In this episode of American Greed.